Hey everybody, welcome back to the channel. I am Nat. I am a management consultant here based in London. So for work, I actually help investors buy companies. So today I'm going to share with you why I think Tesla is going to plummet. And then I'm going to tell you exactly what price I'm going to be buying the shares at. So some really exciting things have been happening with Tesla recently. At the end of 2022, the stock crashed. It fell down to $100. And then in the last few weeks, it has rocketed again. So the reason the shares crashed at the end of 2022 is because the stock was really overpriced and the market was coming down. A lot of investors were moving out of the market because of inflation rising, interest rates rising, and the general feelings of the economy looking really negative. And so the overall major trend is downwards, and this trend is going to prevail. By the way, this is something that I predicted correctly. I said that the stock was going to crash when it was at $270, and then it fell to $100. However, the stock surged in the last couple of weeks, going to around $180. And this is something I would call a sucker rally. This is where the stock has an unjustified rise when the overall prevailing trend is downwards. So this happened just as there are some future signs that the economy might not be looking so bad, where investors are essentially waiting for the Federal Reserve to say that interest rates aren't going to be increased as much as they have been. But I'm sorry to say the economic woes have not vanished overnight. The other reason it is because Tesla's had its earnings call and it's done fairly well. It's pretty much just beat the expectations, with revenue and profit coming in just above what they're predicting. And then Elon Musk saying that he reckons they could make 2 million vehicles next year. So I think a lot of it has to do with retail investors propping up the stock. They were just waiting for the earnings call to come out. And then as soon as they saw that, as soon as they saw some signs that inflation might not be as bad, they put a load of money into the stock. Now, when the prevailing trend becomes more evident, we'll see the stock come down drastically again. Ramble over, I do think Tesla is a really great company. It's just overpriced. So that's why we're gonna have another look at the company. We're gonna look at what the prospects are for growth. And then I'm gonna tell you exactly what price I think it's gonna get to and what I am going to be buying it at. Tesla has come a long way over the past decade, releasing the Model S in 2013, then the X in 2015, the 3 in 2017, and the Y in 2020. Yes, this was one of Elon's stupid jokes. So over this period, revenue grew from around $400 million to over $80 billion. So they grew their revenue at an average rate of 70% per year. If they were to continue growing at this rate for the next 10 years, they would reach $16 trillion. And to put this into perspective, this is the same as around 30 Walmarts or around 60 VWs. That is absolutely insane. Just to be clear, that's not going to happen because small companies can grow quickly, but when you get to a certain size, you just don't grow at these crazy rates. So another interesting chart to look at is net income. This is how much profit they made. So over the last 10 years, they've mostly been losing money until a couple of years ago, they actually started making money. And interestingly, if you add up all the years that they lost money, they finally recouped that in 2022. So lastly, we'll look at the number of vehicle deliveries. So they grew from around 3,000 in 2012 to over 1.3 million last year. That's another crazy growth rate at 80% CAGR. So where does this put Tesla when you compare it to the top 15 automakers worldwide? So they actually come in just inside the top 15, but they're still well off from the 10 million vehicles that Toyota and VW each produce. Interestingly though, if you look at the vehicle numbers from 2019 to 2021, most of the top 15, I think 12 out of the 15, actually have their vehicle numbers declining over the period. In the same time, Tesla doubled their vehicles to 2021 and tripled to 2022. And the reason why they're ahead is because they are producing EVs. So if we compare to the other players, they are well ahead. So one absolutely key question before we put a value on Tesla is, what is their future growth rate going to be? Because valuations of these kind of stocks are really dependent on growth. Now, one thing we can be sure about is they're not going to grow at the historic rates of 70 to 80%. So then let's look at what Tesla are saying. So they've actually been pretty vocal about their vehicle volume growth. and they actually aim for 50% CAGR over a multi-year period. And they reiterated this in their latest earnings call, saying something like, we're gonna keep trying to ramp up quickly to target that 50% CAGR that they gave in 2021. But still, I don't believe it, because if you look at the numbers, they're not gonna be able to get 50% CAGR over that long a time. So look at how fast they could grow in terms of volume is look at other car companies. So the big guys, they produce 10 million cars a year. They're not gonna be able to get there because they're not producing really, really cheap cars. So I'd actually compare to someone like BMW or Mercedes, who are the premium cars in the top 15 automakers. And they're producing around 2.5 million vehicles. Now, I think they could do a bit better than this because they are the pioneering EV maker. They've got a real first mover advantage. So I'm gonna be punchy and say they could make 5 million vehicles per year in 10 years time. So if I work back from that, from the 1.3 million today to the 5 million, that gives us around a 15% CAGR in terms of volume growth. Equally, they could grow faster than that if they were to produce cheaper cars, which had lower margins, so their net income wouldn't grow as fast. So to compare this 15% to another number that Elon Musk has put out there, he said that he wants to produce 20 million cars by 2030. Now this would equate to a 30% CAGR. So this helps us come to a bit of comfort that our 15% is pretty conservative. So the final thing I'd do to really get comfortable behind these growth numbers is look at demographics in the US versus Tesla ownership to see basically, are there enough people that are rich enough to buy these pretty expensive cars? And I think ballpark at 5 million per year, there should be enough based on the average replacement rates, but I'd definitely go deeper into that. So to put a value on Tesla, I'm going to walk through my calculations. So I'm going to bring up the Excel. So as you can see here, I've got my calculations all set up here on the left, and then I've got the latest information on Tesla on the right. So some of the stock information, the latest stock price, and the financials, so revenue, net income, margin, etc. So I'm going to start by looking at the net income. So here I just put it in as the 12.6 billion we saw just the other day. The shares outstanding came in at 3.1 billion. So the earnings per share is just the net income divided by the shares outstanding. So that comes in at $4.10. So then the growth rate, this is a key assumption here. We just talked about that, and I think 15% seems reasonable. So I'll whack that in. So then what I do is multiply the earnings per share by 1 plus the growth rate to the power of 10 to get the earnings per share in 10 years time, the future earnings per share, which comes in at just over $16. So then I want to look at the PE ratio to get, which is the price over earnings ratio, to get to a price. And so to do that, I would look at the historical one. So right now we're at around 50. Going forwards, I think this is a bit high. I don't think we should forecast that. Historically, the stock market has had a price over earnings ratio about twice the growth rate, so I'd take 30. So then the future share price would be the price over earnings ratio times by the future earnings per share, and that gets us in at $493. So this would get us to a future share price, but to get some returns, we need to pull it back to a lower amount to assume some minimum acceptable rate of return. And so I always take 15% for that, which should not be confused with the growth rate. This is completely independent. It just turns out it's the same. So then what I'd do is take the 493 and pull it back at that rate of growth. So that gets us to today's price of about $120. And then we always buy at a margin of safety. So I would just divide the 122 by 2 to get to about $60. So this gets us to the price that I'll be buying the stock at $60. Now, I'd want to get really comfortable behind some of these growth assumptions. And to do that, I'd actually look at another scenario. So let's say we believe Elon Musk in that he's going to make 20 million cars by 2030. So put in 20 million cars, the average price of those cars would have to be a lot lower. So let's say it's around 30K. So then that would bring the revenue in at about 600 billion. So then the net profit margin is going to be lower. It's not going to be at this 15%, up nearly 20%. So let's say it comes in at 10%. So then the net profit would be around 60 billion. So we're looking at the future here. So we don't need to grow into the future, but to get to a future earnings per share, we just divide by the shares outstanding. So that gets us to around $19. So then we want to assume a PE ratio. I'm going to take 20 because it's double the 10% growth rate. And then the future share price, and in 8 years still we're looking at, would be the future earnings per share times by the PE ratio. So I guess it was $387. So in today's price, that would be the 387 divided by the 1 plus 15% to the power of 8. So that gets us to $127. And then we want to have a margin of safety, so it's just this divided by 2. So that gets us in at $63. So it's pretty close with these ballpark assumptions. So I know that Tesla has rebounded in the last couple of days to over $150 a share, but I do think that we're going to see these low levels. I do think that we are going to get below $100 again. I think as the stock market comes down, as Tesla doesn't hit deliveries like they should be, or their margins are hit, I think we're going to see some pretty low levels. So I'm going to be getting myself ready to buy some shares. Now, I'm not 100% on this. I still need to do a lot more reading. I think it's a bit of a risky bet, so I wouldn't put a lot of money in it. It's definitely not a sure bet because, I mean, so much can go wrong. The big car companies can come back and they can beat Tesla. Tesla doesn't have the experience of making cars for years and years. One of the main criticisms I've heard is it doesn't make a really nice finish. It sort of is a bit crappy. It does have some of the best technology. It does have really good self-driving, but who knows what's going to happen. And the other thing that is really risky with Tesla is it really does rely on one key person. Elon Musk, he causes the stock to go wild. If he was to suddenly be cancelled, what would happen to Tesla? I think it may survive, but it's not something that I would be really comfortable having lots of money in the stock if that happened. Thanks a lot for watching. Please post comments and questions below. And if you're a massive Tesla fan, please do go ahead and grill me. And I'll see you soon for some more business and investing related content.